Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey guys, hope you had a great week. So unfortunately, we don't really have, a lot of changes from what we discussed last week. You can see we pretty much had a bit of a breakdown, went sideways, and we have not really, done much beyond that. Like I go to the weekly chart, you'll be able to see that, on the weekly, if I remove everything, technically, this can be considered a bearish engulfing. I would have liked to close near the lows, in which case that would have made a very nice evening star reversal in the making. But again, there was no follow through yet. So, though it is not the strongest of evening star reversals, definitely something to keep a note on, given the way the candle panned out. But in the larger, broader context of things, we know that, we're kind of expecting sideways chop, given that we are at the top of this channel and we are kind of waiting for earnings and election to kind of go out of the way. Again, the two paths I have mentioned, with 5900 being the upside pivot and 5760 being the downside pivot, it's not changed. We are still between that, which is not a surprise. And the VIX, we go to the chart of the VIX, we've still not been able to break 17.7, still being used to support, although the open is not a good sign. Ideally, you would have liked to see follow through, but again, we're back to the range of chop. So it will be interesting to see which way, again, the wicks follows through, whether to the downside or upside. And again, the Qs, we can see that, again, we pretty much pushed in the resistance, but we are kind of opening near the highs this week on Qs. So that will be very interesting to see whether we're actually going to finally have that breakout before elections, or whether this is just, again, we're going to have another fake out and come right back into the range. So that is, again, something to watch out for. As we spoke about last week, the Qs and SPX are at the top of channel, as a result of which we kind of do expect stalling action before the market kind of decides which path it would like to take next. And on SPX, I also discussed how we are kind of in the sideways pennant. Ideally, I would like us to get over 5856 and as a first step, and 5900 for confirmation for an upside breakout. Otherwise, I still kind of expect us to range between 5760 and 5860. I do think that we stay between those 100 points till we do have a decisive macro news that does trigger the volatility that we expect in the market. And depending on how we trigger the volatility, we will have multiple ranging paths. And let's take a look at the 10-year as well. Again, the 10-year does not appear to be slowing. We have gapped up. Any digestion, again, as mentioned, will likely keep getting bought up. We do appear to be in an ABC kind of pattern. And you can see we do have resistance. The next level of resistance on the 10-year is above 4.37%. It will be very important for the market to kind of see what the 10-year does at this level here, at this level of resistance, around 4.365-ish, 3.7. We need to see whether we're going to reject here or whether we're going to digest and try to break out. And if you look at the dollar, for example, I did talk about how this was, I zoom out, bigger picture, you can see this again was a bigger picture pennant, had a fake breakdown, came back all the way to the downside, and now we're trying to again have a breakout. So again, it is extended any digestion, but I do think that any digestion, as long as we stay over 103.2-ish, I do think that this is an ABC that will at least go up to 108. So yeah, the dollar again, it'll be very interesting to watch in the market. So with that being said, bigger picture, we go to the daily chart of SPY. Again, as always, we are gapping up and all. Every gap up for the past 3 sessions has gotten sold. So again, that is something you need to watch out for. I would say this is the level for 583, 584. If you get rejected here, you're going to sell. But if you can finally manage to break out of here, then I would say above 584, you can at least up to 590 before I think you find resistance again. So yeah, keep an eye on this. This is our downward channel. We are trying to gap out of it this morning. So this open on whether we break out of this or whether we break down will be important to the market. So let's see. Either I suspect that we're gonna push up to 590 and then reject, or I suspect that this acts as resistance and we will have a fake breakdown. So yeah, enough about the market. I know I'm kind of repeating myself over and over again, but until the market shows me something else, I don't really have a lot more clues to go on rather than the same stalling action. So yeah, with that being said, let's take a look at this week's watch list. So again, this is the downtrend channel that we broke down from, but this is support. So as long as we hold 300, it does. You can see here that we do have gaps to fill to the upside. As long as you hold that, it'll try to target that, but it is looking more bearish than bullish, and it is getting sued by Delta. So I mean, if the bad news were to have some kind of consequence, so that's why I point out the support level 299, 300. You break that, and given that you've broken the channel, I would say, a move back down to 280 should be possible, and that should make for a nice 5% move to the downside. So that could be something to watch for on the weekly chart, is to see whether we have a follow through to the downside. And again, if the market does flip bullish, you can use this as your upside downtrend line. If we can get over 307, then you can again trade the upside breakout for the gap fill to 340. So crowd, either way, depending on the level it breaks, could have a nice move. So keep an eye on crowd. The next one I have is Square. And again, I'm looking to see if we break out. I zoom out. You can see here, this is the downtrend line all the way from May of 2022. So for 2 years, we have been sideways on Square. And now you can see here, we're finally trying to break out. I'm not saying we will. I'm saying at some point we are going to break out on Square. And I do see two options. One, if we can break 74 this week, we can have that breakout into, 80, 83 on Square. However, if we do try to digest that resistance level, we could come down before we actually break out. So either way, bigger picture, long-term picture, I do think that this is the range. 83 to 60 would be your range on Square. I think this is the base that's going to form before it breaks out. So yeah, you can keep an eye on Square. If it can get over 75, it will try to break out to the upside. So keep an eye on that. I know last week I spoke about Google being bearish, but again, you can see we try to break down. We came down to like 161, but we bounced again. So this again, sideways channel, same as the market. If the market wants to kind of have that push to the upside, you can see here your supply on Google is 167. So if you can break over 167, 168, then Google, might be able to push into 173, which is the next supply zone. So it is indicating a breakout. So if it does break this, you can have a breakout. And again, if it fails, then we know it's going to come back down to 160. So yeah, those are kind of your levels on Google. Something to keep an eye on and watch out for. So that's what I have on Google. And last but not the least, the stock that we're looking at is gonna be FedEx. And again, if you look at here, bigger picture, this is our channel. Rejection, sell off, rejection, sell off, rejection, sell off, right? So we have not yet come to the bottom of the channel. Either this is an ABC that's completed, in which case, if we break 277, we will push up to 300. But again, this doesn't look complete. I do think that if you look at this trend line, you can see the trend line for a wave 5 would come down into the support level at 253. So I do think at minimum, probably looks undone. I don't think this wave 5 action is done yet. But again, like I said, you break 277, you can go fill your gap. Otherwise, I do think that we probably test 250s again on FedEx. And again, a good indicator would be a break of 270, a break 270, then 250 is back in the cards for FedEx. And break 278 and 300 is back. So yeah, that's what I have for FedEx, and that's all I have for this week. Have a great day.
Subscribe to Leduc Trading YouTube channel for more Wolf's weekly wave list videos and other content.